Let's keep on talking about Korea because, like most other economies, it really seems to be caught between a rock and a hard place in terms of stimulative measures to try to keep rates low. We're joined now by Daniel So, regional economist and forex strategist at Forecast. He's in our Singapore studio. And we also have Ray Barros staying with us, the CEO of Ray Barros Trading Group, on the other side of the newsroom. Good to have you with us today, Daniel. Tell me, how are you reading the situation for the Korean economy right now?
Okay, the Korean economy right now is going down. That means the recession is almost a certainty in this quarter. If you look at all the indicators in terms of export, in terms of retail sales, in terms of industrial production, this quarter is going to fare much worse than last quarter. So I'm looking at around -7% to -8% on the annual growth in the first quarter of 2009, which means that South Korea is going to go into a recession in this quarter. But the more important thing is, it's not about going into a recession, but it's how fast you wiggle out of the recession. That's what market is actually looking at. And if you look at the South Korea economy as a whole, in terms of the exchange rate, in terms of the fiscal action, in terms of the monetary policy, all of them put South Korea well positioned for a robust recovery sometime down the line. The exchange rate has actually depreciated hugely, the most competitive exchange rate in the whole Asian region, and fiscal stimulus add up to 302 trillion won for spending in 2009, and that can amount to as large as 3.5 to 4% of GDP. The fiscal deficit, and this is the largest in memory, in South Korean memory, and also the largest as compared to Asian economy. And if you look at the monetary policy, it has the lowest interest rate. It's record low interest rate ever since 1999 when they resort to interest rate policy. So all this means that when written...
Daniel, sorry, it's Adam in the Singapore newsroom on the other side of you here. You know, we're losing track of exactly how much the governments are going to be spending here in terms of the fiscal stimulus packages. According to my notes, they announced something to the tune of 14 trillion last year, another 29 trillion this year. The finance minister is saying that it's likely at about a 1.5 percentage points to 2009 GDP.
Yes.
Economists had expected the economy to contract about 2% or even more. Are you in agreement with that?
I think that if you look into account of this additional supplementary budget, and you look into account that right now the market has overly punished South Korea in terms of exchange rate, in terms of the stock market, I would say that South Korea may see a mild contraction. That's my view. Mild contraction between -0.5 to -1%, not as much as worse as some of the forecasts of -7%.
And all this fiscal stimulus measure that the government's announcing, doesn't it put the government in somewhat of a quandary here? Because somehow they've got to pay for this. And I presume they're going to be issuing more treasuries. But that's counterproductive to what Bank of Korea is doing, trying to drive those interest rates down. But the bond yields continue to go up if we see extra supply coming into the treasury markets.
Yeah, this is one of the concerns. That's why the government has been thinking of steps to actually issue of floating rate, issue of highly liquid notes in a way to actually prevent such a crowding out effect. And I would say that this scenario, in my opinion, is more or less contained. I think there will be some fear, definitely. If you look at the recent fixed income market, the went up of the bond has been going up, and despite South Korea trying to allay concerns that they were trying means and ways to make sure that this issue of a sovereign bond will not actually affect the squeeze the demand, or I would say disrupt the demand supply factor in the bond market.
Can I jump in here and get back to Ray Barros? Why don't you bring up a chart for the Korean won, for dollar won? Tell us what you see from a technical perspective.
Sure, Mandy. There you can see the chart very clearly. We had very similar to the Dow. We've poked above that high. Market's going to come back down here. That's about 1,300. That would be my minimum target. We may see much lower prices once we take out that 1,300, Mandy.